Peak Wealth Management proudly presents Finding True Wealth with certified financial planner Nick Hopwood and accredited investment fiduciary Jim Pilat. Nick and Jim believe by making simple, good financial decisions, you can retire with confidence. And now, let's turn it over to your hosts, Nick and Jim.
Welcome everyone to episode 132 of the Retire with Confidence podcast. I'm Nick.
And I'm Jim.
Today we're talking about IRS and potential tax increases next year.
Yeah, there's been a fair amount of news about the IRS recently with potential tax increases, changes, contribution limits, all kinds of stuff.
Yes, so you want to talk about the things that are official first?
Yeah, that's
Let's
probably
do that, 'cause the other stuff is still speculation.
That's right, we're still speculating on that.
So what do we have updating for next year?
So the IRS has increased the contribution limit on 401ks, 403bs, 457s. They gave you an extra $1,000 that you can contribute if you're under 50. So 19.5 goes to 20,500. They did not change the catch-up contribution amount. So if you're over 50, you're eligible for additional catch-up, which is 6,500. So we had the 6,500 to the 20,500, and now you could do as much as 27,000 if you're over 50.
27. Over 50, 27 into a Roth 401k.
Yeah.
Sounds pretty good.
Pretty nice.
Yeah. So IRA limits?
Sadly, those did not change. They kept those at 6,000 again, or 1,000 catch up if you're over 50 for a $7,000 into IRAs or Roth IRAs.
So it's 6 or 7.
Yep.
Okay.
But those remain the same.
But if I'm under the IRA, if I'm under the Roth limits, which is like 195-ish,
right?
I can do next year 27. If I'm over 50,
over,
27 into a Roth 401k.
Yeah.
And 7 into a Roth IRA.
Right.
And maybe for my spouse as well.
If you could do that same for a spouse, yeah, you're starting to pile up a good chunk of money.
And if I'm over the Roth IRA limits,
mm-hmm.
back door still on the table, right?
Yeah, we thought that was that's one of the things I guess we're speculating on, right? But it seemed that was potentially going away, but it no longer seems to be the case.
It might be hard if you make like 195 to put 27 and 27 and 7 and 7
yeah.
into a Roth 401 and Roth. But like if you make more, you do have that opportunity, right? I mean, if you can afford it, Mm-hmm. What about, does it say anything about like a SEP or solo K?
I don't, defined contribution dollar limits, those went up a little bit. So for those, in the 401s that can, with the company contribution and everything, that went up to 61,000.
That's the number, 61.
Yeah,
wow. So 58 to 61 on a SEP or a solo K,
yeah.
if you have the earnings
right.
to justify it, right?
Mm-hmm.
That's fantastic.
Yeah,
love it.
Nice bump on that one.
Absolutely love it. And if you're a small business that's got a pension plan set up, like a cash balance defined benefit plan, that limit for earnings calculations went from 230,000 to 245. So it seems like they're basically keeping everything consistent with inflation, which is about a 5% run rate.
Right.
So everything's kind of going up by 5%.
Which was a little bit surprising why the IRAs didn't
Yeah.
go up. Because of the inflation numbers, why they were speculating that would also go up, but it didn't.
That's the only thing that didn't change.
Yeah.
So that's frustrating.
Yep.
Okay, well, I look at that as good news. Back in the day, remember when I started in the business, 401k limits were like 12,500.
Mm-hmm.
So to have them up there at 20,500 and 27,000 is terrific. Definitely. So what about the stuff that we were worried about that now apparently is out? I think we can thank some certain senators for holding out.
Yeah, fighting the fight.
If you're sitting on our side of the table and you want to, talk about taxes for individuals and talk about backdoor Roths and all this fun stuff, required minimum distributions and estate taxes.
Mm-hmm.
If you're sitting on our side of the table, right, you're really happy with this news that just came out, which is that tax rates, right now, the maximum tax rate is 37%,
mm-hmm.
and it looked like they were going to increase it to 39.6
mm-hmm.
for the top rate. and now that's out. So their speculation here is that it'll stay at 37.
Right.
There's also a 5% surtax, which would apply to anyone with income over 10 million. So how many people would that really affect? Not many. But that's still in.
Yeah.
So like those guys are going to get hammered.
They appear to have been the target through a lot of this, right?
Yeah.
The higher income earners.
Yeah.
Yeah.
I mean, we don't have any clients who have annual income over 10 million. I don't think so, right?
Yeah,
We're looking for
probably
them.
not. Yeah.
We're looking for them.
Yeah, send us those referrals, right?
Yes, we have ideas. The capital gains. The proposal was to change it from 20 to 25 if you had over 400,000 in income, and that's been dropped out.
Yeah, which is good news because a lot of people, that could be a big sting if you're selling some winning investments over the last few years.
Definitely. We'll talk more about capital gains in a minute. Actually, that'll be next week when we talk about capital gains in more detail. But this is like it was proposed for single earners over 400 or joint earners over 450. Okay, and it's a lot of money. Okay, it's a lot of income. But more and more people are in that range. Okay, we see more and more people in that range, and it's not. I mean, I guess maybe it's the top 1 or 2%, but they all find themselves calling us.
Yeah, it's not an unreachable number, right?
Right.
When you have two individuals typically who have good paying jobs, you can approach that $450,000 threshold.
You can. Yep.
We see it from time to time.
Now, estate taxes. Now, this right now is like 11.7 million per person, so it's really high.
Yeah.
Okay, so if I have an estate of like 23 million, now I have to worry.
Right.
Because you have 11.7 for both spouses.
Right.
Okay. So, this is out. They were gonna lower it from 11.7 to 6, which means that if your estate is 12 million, then you have a problem. And that's a big difference, 12 million to 23 million. It's a huge difference. And it seems to me like this would be one that they would have kept in, but it's out. So we're back to the 11.7. So a lot less people will have to worry about, estate taxes.
Right.
Okay. Now, the SALT, the state and local tax deduction. Apparently, this is out for now, but we have this $10,000 cap for property taxes and state income taxes, which you take the deduction for on federal. So it looks like that's going to be still just 10,000, but it says for now. So maybe that could come back in. But look, I've been kind of banging this drum for a while. The property taxes are a huge problem. I mean, how long have you lived in your house?
18 years.
So you're fine. You don't get it.
Yeah.
You're not feeling the pain.
I feel fortunate with where I'm at.
Yeah. You basically you can't move.
Right. Yeah, I know.
Maybe you can add on.
Right. There you go.
Have you thought about it? You're like, hey, well, I got kids that are about to be moving out.
Right. I know. I'm in that funny spot.
But we bought property right on the lake. And we're moving. I mean, I feel like I'm just like getting crushed.
Yeah.
Like a club with spikes on it.
Right. But so the point is, for those who don't know, right, when you're in a property for so long, they can only raise your taxes so much each year. So if you're in a property for a long time, you typically don't keep up with, the going rate, right?
Yeah, and when you move into a new place, they like destroy you.
It resets, right?
Yeah. So I'm like already taking off time to go fight. I'm like, I just know that I'm gonna have to go. So anyway, here's another thing that was really hurtful for me, which was Roth IRA conversions. They were gonna say that if you make over that $400,000, that you couldn't convert anymore.
Right.
Okay, but that's out. So That's good.
That is good, yeah.
Yeah.
As you've mentioned before, Mr. Roth, right?
That's right.
You like to find any opportunity you can to get money in Roth, so
Exactly.
having that option available still is great.
Looks like the corporate tax rate will be included, but it'll be different. Instead of raising the rate, they'll have a minimum tax. So we'll see how that works. Here's another interesting one. They were going to say if you have like over 10 million in IRAs, Roth IRAs, 401s, that they are going to force money out of the IRA each year.
Right.
But that's out. That was an interesting one because I've never seen that even talked about anywhere. I think what's the PayPal guy who had $5 billion? Peter Thiel.
Peter Thiel, yeah.
He had $5 billion in his Roth. billion.
Yeah. Yeah.
Because he put his founder stock in
Yeah.
his Roth back in like 1998.
Yeah. And then they made some really smart investment decisions after that. So
that made the news.
yeah.
And then
And
everyone
that's when
got
they
mad.
started gaining
Then everyone got
traction.
mad.
Yeah.
And they're like, that's it, 10 million. And like, 10 million is a lot for qualified money. So I get where they're coming from, but that's out. So you're not gonna have to worry about that.
The other thing, and I don't know that it ever even made it in there other than just being a rumor, but there was that rumor for a while that they were going to find a way to tax unrealized gains. And
Right.
that's the one that I thought, man, that's going to be hard.
That was the last one here.
Oh, they did? Okay.
Billionaires tax on unrealized gains. That's
Yeah.
out. So
I don't know how they would do that.
It says, an idea floated in the Senate to levy an annual tax on unrealized gains for individuals with $1 billion or more in assets. But it did not attract enough support, so it's been scrapped.
Okay.
So basically, capital gains, here's what affects everyone. Income tax rates, capital gains. Okay? Unchanged.
Yeah.
Okay? So that's what we're reading as of now.
Yeah.
Now, of course, disclosure, any of this can change, right? This is not a tax advice. This is not this is not advice for you, but it's just conversation. And income tax, capital gains unaffected. We have conversions, backdoor Roths, all still allowed.
Still on the table, yeah.
And it looks like the only real issue here is if you're super duper rich, extra taxes and then corporate tax. So that makes me wonder how they're going to pay for this stuff. Like, is that going to generate enough revenue? And I don't know. I give up on that. But it just seems like there's not enough meat there. But what is official are the 401 increases.
Yeah.
So that's good.
Yeah. So we need to make sure we're remembering that when it comes time to bump up the contribution and make sure we're hitting those.
Yeah. And a little tease for next week, capital gains, big ideas for next week's episode.
You don't want to miss it.
If you got a lot of capital gains in 21, particularly in the past 6 months, you'll want to tune in for that. Episode 133 on capital gains. And if you have questions about, let's say, are you eligible for a conversion, a backdoor Roth? Does it make sense for you? Let us know. Ask us, and we can let you know. And we'll be your second opinion. You can schedule some time with us at peakwm.com. And don't forget to smash the like button and follow button.
Keep our subscriptions
Smash
up,
it. Yeah. We need the stats, right? If you're listening in your car or something, hey, check out the YouTube edition, right? I mean, it's way better.
It is. Completely different experience.
Yeah. Yeah, it's a visual podcast is what it is. Okay, I think that's it. So, see ya.
You've been listening to Certified Financial Planner Nick Hopwood and accredited investment fiduciary Jim Pilat on the Finding True Wealth podcast, sponsored by Peak Wealth Management. You can learn more about Peak Wealth Management by visiting peakwm.com or follow on Twitter at nhopwood1.